Bismillahirrahmanirrahim. Today we are going to look at the MCQs of the AS level economics 9708. So you can see that these are the multiple choice questions. Uh, Paper 1, variant 3, and this is May-June 2020. Time available for these 30 MCQs is 1 hour. Let's start with the first one. The first question says about an economist knows the current point at which an economy is operating within its PPC, production possibility curve. What can the economist judge from this knowledge about the economy? So the PPC is always giving us an illustration of opportunity cost and the possible combination of the two goods output which can be produced. So out of these options you can see that its level of output of two goods will definitely be shown by a PPC, and that's why we pick C as the correct option for this. Okay, so PPC showing all the possible combinations with the available resources of the two products which can be produced. Let's move on to this next one. There are some amount of money which is given for Abdul. Abdul earns $50,000 a year working as a teacher. He owns a house that is an asset, 250,000, and has shares that is his investment. Current bank account, and there is $1,500 in it, and it is a liquid asset. $200 in his wallet, definitely that cash is liquid. In his house there is a jar containing that is again $100 cash, so that is also liquid in nature. What is the value of Abdul's liquid assets? So as we discussed, the current account amount is also considered as the liquid asset. 1,500 plus 200 cash in his wallet and plus $100 which is there in the jar. So if we combine all these, add these amounts together, it will come to be $1,800. So C is the correct option. Which type of good is healthcare? This is a very straightforward MCQ, and we all know that healthcare, schools, education, that is part of the merit goods which are beneficial for the economy, but the consumers don't really appreciate these goods as they should be. So option C, merit goods, healthcare, that is the correct option. Number 4 is which is a normative statement. Normative statements are value judgments versus positive statements are containing some facts, economic facts. So if you read these options A, B and C, they are all positive statements. If the interest rate fall, consumption is likely to increase. Yes, that's true. If the interest rates fall, consumption will definitely increase. We can generalize it. Yes, true. So all A and B positive statements. Interest rates and consumption are usually inversely related. If the interest rates are higher, consumption will be lower. So they are inversely related. Again, positive statement. But option D, the rate of interest should be reduced. So it means that it will be a normative statement. Normative statements are ought to be, should be statements. So in these statements we use these words, should be or ought to be. So it means that D is the correct option. Let's move on to number 5. In a free market there is a surplus of a good. Which change should cause the market to come to an equilibrium? there is a surplus already. So if there is a decrease in price, then of course that surplus will be removed quickly. It means that it will create more demand, lower prices, and whatever surplus goods are there, surplus amount is there for a particular good, that will be easily removed and the equilibrium will be achieved again. So we pick out of these options option B, a fall in price, that will bring back the market to equilibrium.